All right, so stocks finished a really strong week, especially on the Dow and especially on the Russell 2000 at all-time highs. S&P there too. Not the case on the Nasdaq. So we're continuing to get this really big divergence. There were some other signs this week that it wasn't really as risk on as it seemed. I mean, those are really strong bullish moves on the Russell and the Dow. But again, digging within like the asset classes and the sector rotation, maybe not as risk on as we thought it was. So I'm going to break down what those signs are, and what that would suggest, and why, any upside we have, while we might continue to go up for another week or two or however long, the actual size of the rally may be limited, as we still haven't had the same type of exhale that we've seen in the NASDAQ 100 across these other indexes. So we'll break that down, and our trade idea is a stock that has gone just sideways. It's been bullish, had a little bit of a week, some weakness here in the last month or so, and is now centered around a pretty strong point of control. So we're going to talk about how to trade that. So let's go ahead and get started. Today is Friday, March the 12th, 2021. This is the Market Outlook from MarketScholars.com. My name is David Settle. All right, well, let's start off taking a look at the S&P 500 with the market forecast indicator, and you can see here that we do have another day. Look at 4 days in a row to the upside for the S&P 500. Dark green shading a green line still, which means our intermediate line's rising. In fact, our intermediate line is close to crossing back up above the market sentiment line. Little red flag that momentum line's not getting up in the upper reversal zone after coming. It doesn't have to. You can see like it doesn't get up there over here either, or excuse me, over here especially. You notice it doesn't get up here, but it doesn't get down low either on the pullbacks. And this one we actually have. We've gotten some extreme lows, and we're coming off of an extreme low, and still we're unable to really get going. It's because look at all these long upper shadows. Relatively long upper shadows, so I take that for what it's worth. And then you have again a near-term line that barely got in the upper reversal zone. In fact, our last so many, like not counting this divergence, which is one big high point here, but this peak, and this peak, these are the last three near-term highs, and either one of them, I mean, that got into there barely. This one got into it barely. This one didn't get in there at all. And they're very short-lived. At least this one's been, above 50 for a good period of time. We got 1, 2, 3, 4, 5, 6 days. 7 to 12 is your normal, but not getting above 80 like significantly is a little bit of a red flag. Something that, from a short-term sentiment standpoint, is something to keep an eye on. Again, main reason being that all those long upper shadows coming off of some relatively long lower shadows, right? Not closing at the highs of the day, except for yesterday or Friday. Excuse me. Sorry. This is I'm doing this video on the Saturday night after playing. After I did the Market Outlook live on yesterday, we took off, and my 7th graders played in a tournament where we just barely got done with 5 games in the past like 24 hours. So it's a lot of basketball in a short amount of time. So I'm doing this video tonight on a Saturday night. So when I say today, I'm actually, I'm referring to Friday's move here. But you can take a look. It's only in the S&P. The Dow's got a pretty strong near-term run because it's been a lot more bullish. It's actually closing at all-time highs. The Russell 2000, they've got a very strong near-term run. The Russell 2000 has not been getting long upper shadows. We've been closing a lot closer to the highs. Very, very good move, even if the momentum line's not getting into there. On the other hand, the NASDAQ, this is why the S&P is looking the way it is, because the NASDAQ, again, is not, the near-term line didn't get in there at all. The intermediate line is still very weak. It's still below 40, right? So remember, on any kind of oscillator like this, the range is between 60, the neutral range is between 60 and 40. Bullish is above 60, and bearish is below 40. So we haven't crossed back up above that. The market sentiment line is now falling closer and closer to getting outside of its own bullish territory. So, and the NASDAQ itself, if you look at the price action up here, is still below its moving average, came back down, is still below that 23% level. We can't really get going on a new bullish intermediate run until you get above that 23% line and stay there, right, and stay up above that. We've tried a couple of times over here, weren't able to stay there, especially with them being both below the moving average. And like I think I mentioned to you in the last video, by the time we get up, with the moving average falling, by the time we get above the 23% level, this next time we'll most likely be above that moving average, which will probably give it a little bit of staying power and help it stay up there and start a new trend. Let's quickly take a look at the weekly chart, since this is an end of the week. So let me go over here to a 5-year weekly chart. Momentum line did come out of oversold levels. The near-term line popped up from a high point that we haven't seen for a while. We had a pretty decent near-term run. Are we going to get another near-term run on this? Like we did there. So again, this was that intermediate pullback in September and October, right? So that started the intermediate pullback, getting these pull downs below, and then we had this drop below 50. What looked like it was, again, I've told you before, this was about as much of an intermediate pullback as you can get without actually being one, and it looks like we got another one of those now. So far in the S&P, again, about as much of an intermediate pullback we're having without actually getting one. Now remember, we actually did have it on the NASDAQ. So when you look at this on a weekly chart and see the difference, you can see the momentum and near-term lines are still very oversold and are just barely going. And now you have light pink shading. See, we don't have light pink shading on the S&P. We don't have light pink shading on anything else. The Russell 2000 is not even close to. Let's go to the 5-year. There we go. Not even close to light pink shading, right? So we're still very, very strongly bullish. Still really, moving up off of its own little pullback, and with a long lower shadow last week as well there, and along a doji pattern, but back to a really bullish closing above pretty much all of these highs here on the Russell 2000. Remember, the Dow is also looking really bullish, and you can see on the weekly chart how bullish that candle was, finishing the week with another overbought cluster, 4 now during the stretch. And this is the biggest out of all of these. This was the biggest move from open to close that we've had, all of them. And we're, see if you look at the, PPO for how far up above that 30-week exponential moving average, or simple moving average. So if I change this all, to see, okay, well, how far up, this was 9.5%. This one was 10.5%, and we're at 10, and this one over here was 8.6. So this is the highest. This is the overbought cluster that has the highest PPO out of all of these. That kind of gives you an idea of just how bullish this move is. Now over here we were at 12.5%, but that was coming out of from being below the moving average. So this is kind of a little bit of a parabolic type, blow off type move so far, at least, that we're getting with this cluster because of how high that PPO is. Alright, so before we look at some other charts, I invite you to subscribe to our YouTube channel. Mouse over this icon here in the bottom right corner of your screen. Hit the red subscribe button that pops out. There's also one down below the video if you're watching us on YouTube. That notifies you when our videos are posted. Also, while you're down there, click that thumbs up icon. That lets us know, number one, you liked our video today. And number two, that you want us, it's a good way to give us feedback and let us know that you want us to do another video again on Monday. So if you like our videos, you want to let us know, you want us to keep doing them, the way you let us know, one click. If you don't like our videos, of course, you don't have to click on anything. You don't even have to watch. You can subscribe to our website at marketscholars.com by clicking on that link right there in the top right corner of your screen. That subscribes you to our site for free. You get access to our Market Outlook forum, our message board, Market Outlook message board on our site with your free access, among other things. Join our website, or follow me, on Twitter for more content in between the videos from day to day. There's my handle right here at DavidSettle42, and join our Market Outlook Facebook group that we've created. All right, if you're watching us on our blog, check out some of these other things over here on the right, our upcoming trading rooms for next week. You can see Brandon's very popular top-down trend trading here. Here's our Market Outlook live videos. I review all the Market Outlook trades I put on during my Market Outlook videos. Every time I do a Market Outlook, I do this live video at 3:30 Eastern time on the same day. We also put on today's trade idea before the market closes. So even though it's Saturday night, I've already actually done the trade that we're going to highlight later in the video during the Market Outlook live on Friday before I left. So So that's what you get out of that. Again, all of our paid subscribers get access to the Market Outlook Live. They also get access to all of our trading rooms. Our premium subscribers get access to all those things, as well as Q&A sessions and some of these. You can see some of the recent updates that Brandon's done of some of the tools that we offer, among many, among others, that we offer for our premium subscribers. So check that out. Come over here, click on this heart. It opens up a new tab. Hit that like button there. Come over here, click on this thumbs up icon. Opens up another new tab. Hit that like button. Again, the more you do that, it benefits us, because the more content, the more likes and engagements our content has, the more people will reach. Out of all of our followers. Like, again, we have a lot more followers than this on my page, but the more engagements there are, the more people they will push it to. Same thing with Twitter. It benefits you because Twitter and Facebook will promote content in your timelines from the accounts that you engage with the most. We try to make it really easy for you to engage with us right here. All right. So let's now take a look at the weekly chart here and see the Heikin-Ashi candle. You can see it's back to being pretty bullish. And considering next week's candle will open up at this midpoint of the body, so around 38.70, and we're trading at 39.40. So we're going to start off with another bullish candle, similar to what we have on the Dow. I mean, that's a pretty good bullish candle on the Dow, closing above all these highs. Heikin-Ashi close. So very, very bullish. But again, very high PPO as it is. So it's going to be hard, for us to sustain a new move, like a new multi-week move from here, with how high the PPO already is, already up to 20%. The NASDAQ, on the other hand, has been falling. You can see the bearish candles. We are, next week's candle is going to open up about 12,900, and we're trading at 12,937. So we could very well be getting a transition candle next week on the NASDAQ 100. Let's take a look at the 3 green arrows. And you can see we do have 3 green arrows, even though we're having declining volume. The volume really tapered off on Friday on SPY. If you look at the Qs, it did not, right? So as bearish as we were, it bounced up. The diamonds, or excuse me, the IWM tapered off, and the diamonds really tapered off. So volume kind of tapering off as we're rallying in some of these major indexes. The RSI for the S&P is still in the neutral zone. We're a little bit above 100 in the CCI. If you take a look at the directional movement index for SPY, you can see the ADX is actually falling, and the negative index is actually still above the positive despite this rally. So again, puts a little damper on this bullish move here. Not nearly as bullish as we may think. We are in the upper quartile of the Bollinger Bandwidth. The bandwidth is relatively low compared to its range that we see here. So keep that in mind. We're kind of just grinding right now, really not getting a directional move one way or the other. And you can see the trend strength is still about as low as it can be. There's no trend strength at all from a trend quality standpoint. It's actually down at, it's been at 0 these so many days, and the noise balance is about as close to 0 as you can be to it actually being at 0. The Arun indicator, we've talked about that one before, kind of a measure of our bullish pullback. You can see the positive drop back above, or bounce back above the negative level, which means we got a new high tag over here on the right of the chart. That's not the case yet for the Qs. The Qs, the Arun indicator, the negative is still easily above the positive, and we'll see how long that relationship can last with the negative being up above. You can see when the negative comes down, it pretty much makes its way down to back all the way down to 0, or in that direction. If you take a look at some of these other times where it was dropping, you can see a couple of times, but when it gets up in this high point and it drops down, for the most part it drops all the way down, even into the reversal zone. Even in this bearish move where it didn't stay down for very long before popping back up, it did drop down into the reversal zone on the downside. So if we were to break this line here, which it looks like more than likely we will, then there's a good chance that we will drop, eventually work its way all the way back down to 30 with a little bit of a pop here in the green line. You can see going back again over these levels, the green line popped up. Didn't pop all the way up, but it popped up enough to get out of the reversal zone themselves. Again, what I'm referring to on the Arun indicator is these high and low tags. So that's the green line on the Arun indicator. This is the red line. And you can see SPY kind of followed suit with what we saw in diamonds, getting a new high, or continuing to get new highs. And then IWM also continuing to get new highs. In fact, IWM and diamond got the highs at the very, very, very end of the day, end of the week there. So, it shows just how bullish it is. Whereas the Qs, we're not going to get new highs over here for a while. We're just kind of driving down. And the question is whether we'll get a new low tag here. And you can see we are in the lower half of the chart, which means as of right now, we are more likely to get a new low tag over here than we are a new high tag, even though all the other indexes would say otherwise, since we're pretty much all getting new high tags here at the end of the day today, minus this little move in the S&P that's still influenced to a larger degree by the NASDAQ 100. I showed you the volume and the trading range for SPY. The volume down to 64 million. The trading range you can see here was 3 points, and I don't think there was any much of a gap. 390, 353, 391. Yeah, so not much of a gap here. 3 points and 64 million shares traded hands. When you look at that here, 3 points is well below the ATR. 64 million is well below. So, that's a bullish move, right, to see. But it also kind of shows that this is obviously not an intermediate low point, because we wouldn't be down to those really low numbers that fast coming off of an intermediate low point. You typically get a pretty decent surge initially, and we stay bullish. Here, we're already tapering off, which shows it's more likely the end of the mature bullish run that started back here rather than an actual intermediate pullback. Let's take a look at the VIX, and here's another red flag going into next week in terms of how bullish we're going to be. The VIX did drop down to 20, another 20 handle. Haven't had a 20 handle for a while. We beat the 20 handle over here, but look at the VIX already back down to 80%. So it is extremely oversold again, and is setting up for a likely bounce back up in volatility again as early as next week. Now, I don't think we'll get a big 1 week move like these, but can we start to grind our way up towards the 90% level? Definitely, and that's kind of what I'm expecting to see next week. All right, so to summarize a technical outlook, again, bullish as can be, especially in the Dow, especially in the Russell, not as bullish as can be in the S&P because of how not bullish we are in the NASDAQ 100, which has been a market leader for so long because the weightings of those sectors within the S&P are so large and still haven't moderated nearly enough. They still make up a large chunk of the S&P 500, just those 3 sectors alone: technology, consumer discretionary, and telecommunication services. Or communication services. So with that being said, can we get some weak? Can we still get? Have we had a pullback? No, we haven't had a pullback yet. At least not in anything not named the NASDAQ 100. So we haven't had a pullback yet. It doesn't mean we have to go down next week. We can still continue to grind higher, and that's our bullish maneuvering. But considering how oversold volatility is so quickly after this latest bout of semi-intermediate pullback, even though it's about as close again that you can get without actually being one. These on the S&P and not so close on the Dow. S&P is closer because of its closer link to the NASDAQ 100. A lot of those same companies are in the NASDAQ 100. So there's some weakness coming. This intermediate pullback is coming. We've already seen it manifest in the NASDAQ. The question is, the issue is we haven't had it show up yet in any other indexes, and when will it? If we don't now, and we continue to maturely run higher or grind higher, when will it come, and what will it look like when there's more of a broad risk aversion? That's the way I'm leaning towards. That kind of move is coming sooner rather than later. So what do you think? Do you agree with that assessment? Do you disagree? Let me know in the comments section, especially if you disagree, and show why. What charts or indicators are you looking at that would suggest that there is no pullback coming, that we've already had it and here we go, or that it's going to be a lot more than just a little pullback, right? It's going to be more of a, that you're a lot more bearish than I am. So share with the community there what you're seeing that would suggest that to you. All right, so now let's take a look at how things transpired this week and look at the big rally, 7.5% rally. Again, another little bit of a red flag. That's a strong week for the small cap index, 7.5%. To kind of give you an idea, this is the weekly chart for IWM, and you can see this is the weekly returns, and we've had some pretty strong returns on a week-to-week basis. You can see we typically don't get them back-to-back. In fact, unless they've come off of some really bearish weeks, we had a couple over here, but this is very, very strong week to the upside for the Nasdaq. If you take or IWM, if you take a look at QQQ, not necessarily the case. We had a pretty decent week after 3 negative weeks, and that's showing up here as well in SPY. Not nearly as strong of a week. Only up 2% there. So you can see the up and down nature of this from one week to the next. So again, going back to that asset class comparison chart, and again going back to looking at this week alone. Go to a 10-minute chart here. And you can see small caps real estate did very well. The Qs lagging behind the S&P 500. Developed markets and emerging markets especially. Look at emerging markets are barely up on the week at all, mainly because of how soft commodities were. And then look at the big drop in bonds. So bond yields continuing to make a run after being relatively flat for the past week. But if you take a look at yesterday's move, Friday's move, we broke up above the high of that long upper shadow. So pretty bearish, bullish, bearish on bonds, but bullish on yields to get that breakout there. And you can see we're headed towards a cluster, depending upon how we finish Monday, headed towards a cluster again on the, that would include the 80 level, which we haven't seen it above 80 this whole entire year. This is the first time it's been above 80. So to get a cluster now would just show how bullish and really how parabolic this move has been getting. Again, you look at the DMI and you look at like TLT and look how high that ADX is. So we've really gone parabolic here. We haven't really started to break down yet, but we are getting divergences on these directional indexes. So there's an opportunity here for bonds to rally as the purple line rolls back over to the downside. Take a look at the Euro US dollar. It's been making some decent moves too. It got back up to that close to the 30-day moving average, around the 17-day before popping back down. In fact, if you take a look at it here on this chart, you can see that. Here's the Euro US dollar, and you can see getting up towards the 17-day, getting back below the 8-day moving average with that run. So strength in the dollar usually doesn't lead to strength in equities. So keep that in mind. It's usually a risk-off trade. If we continue to make that move to the downside, like I think we will, down into that area, 1770, that will most likely coincide with a more of a risk-off move that would associate with this, which has gone parabolic to the downside, bouncing back up and making its way back above its 8 and 17-day moving averages, and eventually back up towards that 30-day moving average to see what it does when it gets to that point. Again, this is the Qs relative to IWM. The Qs being, large cap tech growth, of course. IWM being the small cap anything, but a lot of value in there as well. So once this rotation goes up, it will most likely coincide with a broader risk-off move because you would expect small caps to fall more than the NASDAQ, because the NASDAQ's already had its weakness, and IWM is like, there's no weakness at all. We just continue to push to the upside. All right, now let's break down this week's moves from a sector rotation standpoint. Consumer discretionary really blowing things out of the water. Again, remember, small cap stocks had a great week, 6-7% move to the upside. But look at discretionary rallying. After that, you had your typical materials, industrials, financials. Energy has been a big winner along with those areas, did not participate. Of course, technology, communication services lagging. But look at utilities and real estate. Those are not areas, especially with the rise in yields, those are not areas you would expect to do well. So again, it kind of shows that it wasn't necessarily completely risk on, considering that those areas were two out of our three biggest winners to the upside for the week. So when you look at the sectors on the grid formation here, you can see, look at the weakness. We're still getting technology and discretionary. As bullish as discretionary was this week, it was because it was so bearish. Communication services looking a little different, but look at how high materials and energy and industrials and financials are above those 30-day moving averages. Very, very strong moves to the upside. And then look at the strong move on real estate and utilities, staples to a little bit of a degree. So we're getting some rotation, and we continue to get that rotation. I've shown you this chart before as QQQ has been lagging behind, but we're continuing to get a rotation into these kind of weaker safe haven areas. Sector rotation. Let me get the sector rotation. We're getting a rotation still into these safe haven areas as we're losing momentum in materials and industrials and financials and energy, and gaining momentum in utilities and even discretionary technology and communication services to a degree, as well as real estate. So right now, utilities has the strongest momentum out of all the sectors, and materials has got the second most, but it's falling, and staples has the third most, and it's rising. So you see the rotation into risk on, risk off, and from a weekly standpoint, a little bit of a degree of that as well. Energy is still very strong, financial still strong, but there's communication services rallying, and there's real estate and utilities gaining a lot of momentum as well. So a little bit of a shift into risk off areas are starting to occur, and a lot of them have a lot of room left to go. You look at like utilities here, and you can see how bearish the relative strength is. It's just starting to turn up with some momentum, so it's got some relative strength left to go. And real estate, its relative strength is turning up from very, very low levels, and you can see over here when it turns up in this part of April, or first part of 2018, they have real estate and utilities rallying as strong as they were on a relative basis. That's not the most bullish for the broader markets to see such relative strength in those particular areas. All right, for our trade idea of the day, I want to take a look at Coca-Cola. Coca-Cola has been a very strong moving stock. It had a little bit of a bout of weakness here early in this year, late last year, early this year. It's really produced a weak bullish response here in the last little bit. If you take a look at like its 3 green arrow chart, you can see we do have 1 red arrow and a little bit of a loss in momentum. If you take a look at the 2-line versions of that chart, you can see the pullback in the MACD and stochastics, even if we're still above a rising moving average, just 1 day below the 17-day moving average. You can see we've had our golden crossover, and we're starting to flirt with bullish candles in the beginning of a bullish move, though more muted, especially considering both these lines are as flat as can be, sitting right on top of each other. Let's take a look at the some of these other charts. RSI and the CCI, you can see in neutral territory, right smack dab in the middle between 100 and negative 100, right smack dab in the middle between 40 and 60. The directional movement index is saying we are not getting very much of a move. The ADX is really low. Both the lines are close to being below 20. The Bollinger Bands, you can see the band width is very, very low, very sideways, centering around the point of control. And so when we're in that kind of position, the trade I like to make there is looking at a iron condor spread. So if you look at selling the 47.5 put, buying the 40, and then selling the 52.5 call and buying the 55, that gives us this trade here with those break evens that I've thrown on that chart. So when you look at the break evens here, they're outside of the 4-week range. And if you look at on the Bollinger Bands again, We've got break evens at volume at important volume nodes with all the volume, a big chunk of the volume centered inside of our break even range, right where the price is right now. So acting as a good center of gravity, so to speak, for this iron condor, and along with all the other iron condors that we have from previous trades into April expiration, trying to take advantage of some of their neutral, some of these stocks' neutral trends. All right, you've heard from me now. Now I want to hear from you. Use that link popping out in the top right corner of your screen. That takes us to our Market Outlook forums. Open up any new threads with any questions or comments you have there. I reply to anybody else's thread. Remember, all of our subscribers, our paid and our free subscribers, get access to that forum. So let's keep this conversation going in between videos. As always, thank you very much for watching. Remember to subscribe to our YouTube channel, hit that thumbs up icon, like us on Twitter and Facebook as well, and comment on the video. Have a great rest of your weekend, everybody, and we'll see you all on Monday.